Hello again, people. Right, I had a couple of attempts at this video during the day and it never worked out right, so it's quite late in the evening, and the whole point of this is I've got a sort of a bee in my bonnet about the way so-called expert traders and I don't know, gurus, furus, they talk about always having to make a reward risk of 2, 3, 4 to 1 or whatever, and how clever it is to only trade that way, and how, I think I mentioned this in a previous video, it might have been a sort of a outtake as it were, one that I didn't upload, but you know, talking about 90% win rates, they can't trade, they can't do this, and I couldn't quite get to grips with the right way to express it, and I think I've got it now. Basically, and this is also about trends and stop losses and safety, trading this way is actually a really safe way to trade, and as such you don't need 3 to 1, 2 to 1, 5 to 1 win rates, because reward risk rather, because primarily you are entering when, because of the trend analysis and the fact that you're getting in at the bottom, at the safest point to get in. I always talk about not picking bottoms and not picking tops, but what I mean by that is not just drawing a level of resistance on a chart that's been hit 3 or 4 times and thinking, yeah, I'm going to short it the minute it hits that. That's picking a top, and picking a bottom would be having the opposite of support. What we are doing is trading from the bottom, but when all the sellers have been flushed out of the market. They've been faked in until there is no more selling momentum, selling bias. And I truly believe, I've said this before, that's the algorithms doing that. So if you think of the fact that you're entering the trade at the best possible point, and I don't mean the lowest point when you're taking a long trade, I mean, as I just said, the point that everyone's been flushed out of the market. So trends are what the algorithms have been designed on. They have to have been. I know you've got these ultra microsecond, millisecond algorithms that exploit certain types of market, but there must be something, a reason that the trends worked 100 years ago and they look exactly the same now. Vic Sporandio's reversal patterns and whatnot, they've been built on, some people talk about the herd mentality of trading. So if you are entering at the best possible position, in other words when everyone's been flushed out, buyers if you're shorting and sellers if you're buying, then it stands to reason your stop loss is going to be really tight, and it also stands to reason that the win rate is going to be quite high. So when you get good at this, good scalpers have win rates of 95+%, and if you're sometimes getting 1 to 1 RR, sometimes getting well, more often than not you are getting a 1 to 1 RR. It's really, really rare when you enter these trades, providing you follow the rules and use this momentum indicator, which is where this comes into itself. But we've even got one here, and I didn't pick this. There's your bust, if you like, there's your pullback, there's your break and close, and what happens? Price goes up, and I didn't pick this chart on purpose for this reason, it's what happens. So you enter on that candle there, low, high, higher low, higher high, there's your trend. There's probably a 15-minute reversal there. If there isn't, well, we're not worried about the technicalities, but you wouldn't enter the trade if there wasn't. That's the point I'm making. But if there was, and you got your 5-minute reversal, then you're in, and you've actually got probably a 2 to 1 RR, just grabbing 8 or 9 pips out of this, because it hasn't come back at all. All you've had is the spread, the cost of the spread. So all you've got to do is train yourself to do what I've been trying to teach you to do with simplicity. That's the that's the reversal there, and you know, and the RSI comes into its own there. So, you know, if you've the other point, yeah, that was the other point that occurred to me. These guys are talking about only having 5 to 1 RRs because they are getting involved in trades that go up and down and up and down, and they're trading a penny a point or a pound a point because they know they could have, I don't know, a 60 pip they call it whipsaw or stop hunt on them, because they're not applying the same logic that this style of scalping is. They probably truly believe what they're saying. It's just because they've had that BS fed to them by their mentors and their mentors before them. It's because they don't understand. Now, I'm the opposite. I don't understand swing trading. I cannot understand why, when you can work out the precise way to enter a trade, be it in the process of the trade, getting into swing 5 somewhere up here or something, after we've had this same pattern here. This is exactly the same pattern. We could draw it on the 1 minute chart as we've got down here. All we're doing is entering the trade here with exactly the same pattern here. I always want to be trying to enter as close to the bottom as I can, and as a novice I suggest you don't try and get into trades in the during the trade. Just concentrate on getting the reversals. But this is the bit we're looking at. Just to double check that, we'll put a vertical on there. Should have done that anyway. There. And that was the bit I was trying to explain. So M1, and now we can look at the internals of this, and we've got the same pattern, downward trend line, low, high, higher, low, higher, high. Once we get this higher high, that high is broken by this, we can draw our trend line, and we effectively have created a new entry. And as you can see, this has pulled back on itself, so it's not the perfect entry. But in a perfect world, we would replicate what happened here, over here. And the way I actually had my eureka moment, I've said it many times, but just in case you haven't seen that video, was this situation here. We know that pattern there is a 2B reversal. And in fact, this is a lower 2B reversal here. Swing 1, swing 2, swing 3, poke bar, break of this candle here, and the price, that's where Vic Sperandio would say enter the trade, so about here. And then over here, lo and behold, we've got the low, the 1, 2, 3, stick the vertical on there. Let's just say, for example, this situation is that candle there. So when price breaks the high of that candle there, hopefully you can see what I'm talking about, that's when Vic Sperandio would have gone long. So we're using a 1 minute 2B reversal to get into this higher time frame 5 minute 2B reversal, and that's it. So we've covered tiny stops, high win rate, and the fact that these guys that tell you must trade with these higher reward risk ratios just don't understand what we do. So don't listen to it. Prove it to yourself that you don't need to listen to it, and understand the safety of this method. You know, once we've entered, I've said this before, all we've got to be is behind swing 2, below the resistance, because once all those sellers have been flushed out, then you may well get what I used to call the swan song, where they just push the price down, but more often than not it will just go to test an old resistance level. So you've got swing 1, 2, 3. This is swing 1, 2, 3. This is swing 2. My old mentor used to say put the stop below there. Vic Sperandio does too, but I have watched thousands of these, and as long as you're below the high of 2, well below it, somewhere around, just pick a spot where you can see there is some not wicks, but some strong body, and when they push up, that's when they will that's when you're safe, as it were. So when you've entered, this is a highly safe stop. You can only do that by back testing and looking and watching it yourself. Find these low reversals and high reversals that follow all the rules, and work out yourself, or observe for yourself that what I'm saying is correct. And that's why you must always, when you're entering trades, put hard stops on demo or live, but especially live. And then that's it. So hopefully I've covered. Trend reversals are massively, once you've learnt them, are massively reliable. We don't have to go for huge reward risk. Just take the trade to the an obvious level of resistance. So in this instance, if this round number, well, half round number was here, you take the trade to there, and it might be 8 to 10 pips. But if it's up there and you can't see any obvious support and resistance on candle highs, then take it up to there, which might be 15 to 18 pips. Same goes for pivot points. They act like magnets. Same goes for old strong levels of support that are above the price, because price goes to test old support to see whether it holds as new resistance in a long trade. So that's why it's worth watching as many of the videos that I've made as you can. Obviously the later ones are better because we keep changing bits and pieces of them, and it updates. This is why the RSI has taken over, because you can quickly see the RSI bust, pull back, break and close, and then you can just confirm that you've got because the 3 candle reversal will tend to be at that point. That's why I added this to the method, because the two are complementary to each other so well that's why I think this is a 10 out of 10 indicator, and the 3 candle reversal is so good too. Anyway, any questions about this one, watch the video and then stick the questions on Twitter, because it's much easier to answer questions on Twitter than it is on YouTube. So thanks for watching, and have a great evening.